Viewers will recall world equity markets taking something of a tumble last week over weaker than expected manufacturing data out of both China and Europe. Currencies were also impacted, particularly commodity-based currencies such as the Kiwi and Aussie. But that's not all. Oil prices initially took something of a tumble, though they managed to recover over the weekend to be back within the 105 to 110 US dollar a barrel mark, which is pretty much de rigueur for the last couple of months. However, these are still relatively elevated levels. Looking back to October last year, for example, oil was at US $75 a barrel. Now, these elevated levels are concerning world leaders, particularly in the US and the UK, who fear that elevated oil prices will have an effect to bring back the economic recovery that's happening in both Europe and US at the moment. Looking at markets, the Dow was up 35 points on Friday close, on slightly more optimism that that manufacturing data had been effectively oversold. There was also an impact on commodity-based currencies, and in particular, the Kiwi was back up through the 81.5 US cent mark, up to around 81.77 this morning. As sheep farmers will be aware, February was a reasonable month for scheduled prices. The actual farm operating price for February was around $6.90. However, this masks the fact that there was a significant fall-off in scheduled prices towards the back end of the month. The reason being that once the Easter chilled procurement had run its course, prices dropped off. Export numbers for February were high. Around 30,500 tonnes of lamb were exported, and this is roughly 12% up on February last year. The key question, though, is will the markets continue to hold up in Europe? Anecdotally, there is significant amounts of excess supply, and the chillers are filling up. However, if you actually have a look at prices, one of the interesting things is that in terms of pounds in particular, lamb is actually above what it was last year and indeed above the 5-year average. However, exchange rates are a significant problem. If you actually examine the lamb prices in Kiwi dollars, in fact, the situation is the opposite, with lamb prices being below the 5-year average. Given the fact that there seems to be a significant amount of stock left to kill, farmers will be hoping that the currency does come back and that creates some kind of equilibrium between oversupply and that currency issue.